China worries and Ford makes a big battery investment in Canada. Welcome to Kitco Roundtable, sponsored by Snowline Gold. I'm your host, Michael McCrae. Paul Harris is here.
Hey, Michael. How are you?
Very good. We have no guest this week. Let's turn to macro. Metals are sliding due to recession worries, higher for longer rates, and China concerns. China is a story that is dominating commodity markets. A handful of large Chinese property development companies are under stress. Today, Evergrande announced that it filed for bankruptcy protection in the U.S. Earlier this week, China's largest private real estate developer, Country Garden, missed a bond payment. With China worries, investors fled to the U.S. and the dollar gained. The dollar hovered around a 2-month high on Friday. The dollar is set for its 5th consecutive week of gains in the longest running winning streak for 15 months. As of this recording on noon Eastern Time Friday, gold had dropped through the 1900 level to trade in the 1890 range. Oil is at the $80 level and copper is near 370. Even critical metals are not immune. Tesla has trimmed prices on its Model S and Model X cars in China. The prices are being reduced by more than 6%. Tesla is down 10% for the week, and the lithium index is down 5% over the past 5 days and trading at a 52-week low. Up next, mining news, but first our sponsor. Snowline Gold, ticker SGD on the TSX Venture and SNWGF on the OTCQB, is making waves with their focus on district scale greenfield gold discoveries in Canada's Yukon. With 330,000 hectares, a land package, and an exceptional leadership team, they are well on their way to unlocking Canada's newest gold district. Snowline's 2023 exploration program continues to top the charts with industry-leading drill results and the latest holes returning over 2.5 grams per ton gold over 553 meters at the Valley Discovery, making it one of the best drill holes ever drilled in the Yukon Territory's 125-year history. To stay updated with Snowline Gold's exploration program, visit snowlinegold.com, ticker SGD on the TSX Venture. Paul, how about those mining headlines?
Thank you, Michael. Well, a slow week for news this week. I guess a lot of people are on vacation, but some good highlights nonetheless. Ford Motor Company and South Korea's EcoPro and SK On are to invest 1.2 billion Canadian dollars to develop an electric vehicle battery plant in Bécancour in Quebec. The consortium aims to produce 45,000 tons per year of cathode active materials for electric vehicles for Ford, particularly pickup trucks, marking the automotive company's first major investment in the province. Construction is planned to begin in 2026. Sticking with battery metals, Piedmont Lithium increased its stake in Atlantic Lithium's Uwaya lithium project in Ghana as part of a staged investment agreement to earn a 50% interest in Atlantic Lithium's Ghanaian lithium portfolio. Having funded the feasibility study, Piedmont exercised its option to acquire a 22.5% interest in Uwaya and plans to provide a further $70 million towards development capital to acquire an additional 27.5% interest in the project. Some $185 million of capital costs there for Uwaya. Piedmont can purchase half the spodumene lithium concentrate production from the operation as feedstock for its proposed 30,000 ton per year lithium hydroxide conversion facility in Tennessee in the USA. Goldfields said its delayed and over-budget project Solaris Norte in Chile remains on track for first production later this year. Originally expected to cost $680 million, its capital costs were revised upwards later this year to more than $1 billion, while first gold was delayed from the March quarter to the December quarter. The mine is expected to produce as much as 600,000 ounces a year of gold equivalent at an all-in sustaining cost of $660 per ounce. The company's share price dropped this week about 10% when it released its June results, with production down 4% to 1.15 million ounces, while all-in sustaining costs were up 6% to $1,215 per ounce. Its earnings also fell. Finally this week, Canadian copper producer Imperial Metals is to raise another 16.8 million Canadian dollars to fund the operation and development of its portion of the Red Chris mine in British Columbia. The Red Chris Block Cave feasibility study is expected to be completed in the second half of this year. Imperial ended the quarter with $57.5 million in cash after reporting a $16 million net loss and a $103 million working capital deficit.
Now, Paul, we don't have a guest, unfortunately, but we do have a number of the week. I'll let you start. What's your number?
Oh, wow. I didn't think we were going to do this. My number this week is 8. Got me a little bit annoyed. My number is 8, and it's kind of related to your macro bit at the top, and that's 8 straight days which the gold price fell. I think that's its longest losing streak for a number of years.
Paul, we didn't plan this, but my number kind of dovetails on top of your number, but it just goes to kind of the bleak attitude that is happening in the commodity industry right now. That's kind of reflected mostly on kind of China concerns and just looking at how would you say more worrisome about a possible recession that we're heading into. My number is 1 year. Adding to the metals gloom, the resource ASX heavy index had its worst week in over a year. The TSX Venture is also slid 3% for the week. That's it for us. Follow me at Michael McCrae. That's McCrae with 2 C's. Paul is at Paul Harris Gold on Twitter or X or wherever you prefer. On behalf of Paul Harris and myself, have a pleasant weekend.